Started just a few minutes early so I could bring over this. So if you're not yet a member of the Bullish Bears, I know a little bit of plug, right? You really ought to check it out. We got free sign up. You don't have to pay just to check things out. But the next level, this is kind of my darling or my sweetheart. I made 90% of the content in the options tab. And when I made this stuff, I was frustrated by the lack of what I found out there when I was looking around trying to learn options. So I made this material based on what I could not find. Specifics about strike selection in debit spreads, days to expiration, what strikes to use, how to recognize when I was overpaying for things. That was the kind of stuff that I was struggling with. How far out in time should I go? When should I build the trade out of the money versus at the money? When should I be taking profits? And what does failure look like so that I can abandon the trade without taking full losses on them? When I built this options material, it wasn't just some generic little video like this is a debit and this is a call. You put a strike here. And there's a million of those videos out there. I didn't need to contribute to that. Uh, then we started getting into strategies, very specific, nuanced pieces of material that says, you have this pattern on the charts. You go in and you look at these options with this pricing model for this expiration, mechanical trading strategies, which I'm a big fan of, so that even with a lack of technical analysis, you can still perform reasonably well. I make a lot of trades without in-depth technical analysis of the charts, which is great in a market environment like this where we're just getting whiplashed. So, if you haven't come over and checked out the next level, you really should. It's a game changer. It's really what takes you to the next level. All right, I've plugged enough. Bring in the Zoom and we'll get this started. All right, good morning, everybody. The volume is continuing to get lighter and lighter and lighter. So, one thing that always bothers me when I'm trying to look at the market at night or trade the market at night, because I trade futures in the Globex, is that the intraday volume always makes the nighttime volume seem so tiny and small. So, I wrote a new code. You'll find it in the Thinkorswim Discord under volume. It's called a Globex volume. It's very simple and basic. I just turned off the daytime volume so that we can see the nighttime volume better. That's all. Yeah, it doesn't do anything fancy. It's not calculating any advanced, metrics or measurements. It's just the volume from the daytime is turned off so that you can see the nighttime volume better. This was Sunday night into Monday. Okay, right? I mean, there's some volume there. Yeah, this was Monday night into Tuesday. It's less. Here's Tuesday night into Wednesday. Where'd everybody go? They're all hunkering down for Christmas. So, you know, uh, I don't say things like, well, we shouldn't trade. You find an opportunity, trade it. Just remember it it's going to be more and more difficult to get moves, right? There's just nothing there. And on the other side of that, a really big player can come in and move this market, right? Because there's a lack of liquidity. You don't have to worry about getting filled, though. That's a really good thing. If it ticks through your spot on the dome, you're gonna get filled. So I mean, at least you have that. Market watch. 8:30, 10, and 10:30, and then we got the 5-year tips auction at 1 o'clock. 17 billion of 5-year tips. That's nothing, right? No big deal. So the 1031, the EIA petroleum status report, that's the one where we go over to USO and maybe X Steel, or pick your steel company, right? It doesn't matter. And that's because, oftentimes steel and oil will correlate. When this report comes out, if you don't see a reaction, say within 2 to 5 minutes in USO, there's nothing there. Just, shrug and move on. Don't try to force the trade. And it's because a lot of times when the report comes out, we don't see anything. But if it surprises, right? If the market was caught off sides, or some numbers come out that uh, shows an increase or a decrease that was unexpected, then we can see a move in the market in USO. So we're looking for a catalyst to happen. If it doesn't happen, then let it go, right? It's no big deal. Um, I always forget this one. I mean, like, all the things that are on my radar, that one's not there. But if you right click, you can create an alert and just give yourself a reminder 15 minutes early. And that way you don't forget, right? If you got a smartwatch or whatever, it'll remind you. And, it'll pop up here in the messages too. The rest of them, I never want to say something like, oh, that economic data is worthless. It's not going to impact us. Nobody knows. There are higher expectations of impact on some economic reports than others. If you use something like FX Street with its economic calendar, it actually will give you a little uh, color scheme on its anticipated impact level. Right. So you could do something like that and just go and look at today's and see which ones of these are expected to, be impactful or are impactful historically speaking. So the president talked yesterday. Somebody should have bet me that he was going to be late. He was late, right? I'm not criticizing. The man is busy, but we were running a bet on would he be late or not. And it's not this president. All presidents show up late to their own pressers. It makes sense, that they got a lot of things to do, and chatting with the media is not exactly top priority. But anyways, when he was talking, the number one thing that the market responded to is no lockdowns. No lockdowns. This thing is running like wildfire with gasoline being poured on it, but its severity level is not as bad, right? So no lockdowns. We're one of the few nations in the world who's making that statement right now with a stomped foot. No lockdowns. The market really held its ground on that one, and until he even winks that there could be some kind of lockdown, then that's what we're going to run with. No lockdowns. For today, I marked out these levels, the 1%, the 2%, and we've talked about these levels before, right? A good, average, normal, decent, bullish day would be a 1% move. And a good, decent, average, bearish day would be a minus 1% move. A wow day would be a 2%er, right? And then, I mean, it's gone threes and fours before, of course, but so that's our average, right? And what do we have right now? The average daily range, meaning over the last 20 days, what has the ES done on a day-to-day basis? About a 1.82% move. Okay, right? Higher than the one, less than the two. That's what it's done uh, in the last 20 days on average, a 1.8% move. The market's been open for 12 hours and we are flat. We haven't gone anywhere. In fact, when I got up this morning, we hadn't even broke through the top of that range yet. The top of that range, by the way, is yesterday's highest value. Talk about your institutional pivot points. Faded off and bumped our head again and again before it finally broke through. The old phrase, persistence beats resistance, right? So we got through it. Now we really need to see it provide support. Kind of got an ugly little Busby there, depending on the time frame that you're looking at. There's just no players, guys, so be careful. A move to the upside, I really don't see us breaching past the 1% today unless things get exciting. It won't be a surprise, right? You'll see everything lit up, tick trend AD, market breadth. Um, it is worth noting yesterday where we were at in advancing issues in the S&P. I don't want to turn off my indicators because I still want them on the other chart. So ignore those. We wouldn't use indicators on a market breadth study like this. But this was Tuesday, and we're looking at how many companies out of 500 companies, how many companies in the S&P were advancing. Now notice I don't have advance versus decline. I don't want advance versus decline. I don't need the decline. There's 500 names. If 400 are advancing, what do you think the other 100 are doing? Not advancing. So it just becomes confusing to put advance versus decline. We dropped below 400 names yesterday momentarily. We didn't stay down there for very long, but we dropped below 400 and then came back up again. Look at how much of the market is advancing right now. 426 names yesterday were advancing. It didn't feel like that in the S&P. If you want to know how to find these, by the way, you come up to the top and go to indicators right here. And these are market indicators, old school stuff that a lot of people really don't look at anymore. It's no big deal, right? And you can find all kinds of good stuff: put call parity, um, how many names are above their 50 period moving average, advancing issues, declining issues, UVol, DVol, just all kinds of really great stuff. So you can also go in and find, say, the NASDAQ advancing issues, NASDAQ 100 advancing issues. We really got down into the 60s momentarily yesterday and then came right back out of it. And we stayed above 75% through the rest of the day, tagging and pushing hard into the 90s. So, when you're looking around and you're going through the S&P 100 watch list, the NASDAQ 100 watch list, the Dow Jones, and you're looking at how many names out there are running, trying to find opportunities. Yeah, plenty. Just make sure if you're trying to put on a hedge or a swing to be hedged, right? You wouldn't put your car on the highway if you didn't have car insurance, right? Yeah, it was perfect sense. Just just protect yourself if you're going to be swing trading in the current market conditions. That way, uh, for an example, when Corona hit, when it did hit, right back in February, early 2020, everything fell. Everything fell. There was no safe place. You couldn't go to gold, you couldn't go to oil, you couldn't go to natural gas. Everything fell. So there was no place to go. If you're looking at your portfolio and you're thinking, "Yeah, I'm diversified. I've got, some precious metals, I've got some growth and value, and it's all going to fall. If we get whacked, it's all going to fall, but your hedge will cover it, right? Some. Just like with your car insurance or just like with your house insurance, your insurance never gets you back to solid, right? It just kind of helps you get back some. It's still better than nothing. All right, for the Nasdaq, we had this really nice megaphone pattern. I think it's a megaphone pattern. I'm not a huge fan of these because I don't have enough information on them. But that sure looks like a megaphone to me. We broke out of it this morning. That was my trade of the day. I'm done. I'm day done. I'm always day done before 8 a.m. Either because I got my trades done or because I ran out of time. And either way, I'm done at 8 a.m. That orange line is the daily 50. That's the daily 50 period moving average. This purple line down here is the floor pivot. Now they have this concept called a missed floor pivot. It's actually a tradable opportunity. and or it is a signal of strength, right? Markets tag their floor pivot more than 80% of the time. When a market does not tag its floor pivot, it holds some significance to it. So this has maintained that push up off of yesterday's lows with enough strength to avoid touching its daily pivot. It's called an MDP, missed daily pivot. You can look into that. It's not a bad trading strategy. And even if you don't trade it, it's not bad for evaluating a trade, right? Like if we had went long yesterday and we were in a market that didn't stay open all night long, in the morning we would be looking at this and asking, is this trade still good? Is there still momentum and trend? Are we going to break through this level from back here? Blah, blah, blah. And we could say, oh, well, it's not yet hit that daily pivot. We've got a missed daily pivot in play. Now, I'm only showing 1 day pivot. Obviously, we turn them on and we could look back and you could see examples in the past of a missed daily pivot and how you could use that to provide context or confirmation of the strength of momentum or the continuation of a move. I did see when I was studying missed daily pivots that you can use them for trade triggers the following day. I I don't I don't like it. Make something for yourself, right? You got a market behavior now, you can work with it. The blue line is the daily 10. So we're under the 10. We are underneath yesterday's highest value, but we are above the 50. We're going to be looking for that 50 to do nothing for us because we've crisscrossed through it. We've disrespected it multiple times now. There's nothing left to it. It holds no validity, no weight, nothing. The very thin black line there is the close from yesterday, and you can see that we're breaching it yet again and coming back down. But look how the market responded to it the first time we got there, right? Just first touch plays. A lot of times will offer you a nice fade opportunity. That's a 25-point fade play right there in what 20 minutes. Well, 30 minutes. You gotta love it. I love trading the Nasdaq. This sucker moves, right? And first touch plays are phenomenal. They don't sneak up on you. You can see them coming from a mile away. Get your day done. I was sleeping during that one, but we'll have another one, right? So the same thing for today. We are at this critical level. The big question is, are we going to get out of it or not? And once we get out of it, are we going to keep it? The NASDAQ has an ADR of 2.4%, and we are flat. Just like on the S&P, we're flat. There's nothing there. Look at the decrease in volume in the last 3 days, Monday, Tuesday, and here we are on Wednesday. This is just Globex volume. It's going to get lighter as we go into tomorrow, and there's a lot of economics tomorrow. Right? Look at that. It almost feels like a data dump. You remember when they were saving uh, things through the House and the Senate and Congress, and they would wait on it and wait on it and wait on it, and then data dump us on Friday? That's really what this feels like. End of the year data dump on us. It's not though, right? I mean, these were scheduled; they've been in the books, but I'm just saying it really feels that way. Lots of stuff on the books for tomorrow, and it's going to be even less volume. No trading on Friday. There will be trading tomorrow. We'll deal with it tomorrow, right? All right. A couple of names: earnings, CarMax, Paychecks, and Cintas. And then I didn't go through and line up all of the different strategies that I would normally be hunting for in the morning, but I did start looking through some red to greens, and these names kind of stood out. There's not a lot of good stuff out there at the moment, right? Just kind of, a little bit of perspective. AMRN, red to green. So yesterday was a red day. and or a doji day, we're going to be expecting the follow through. Let's try this on a 180, a 12-hour chart. Turn off pivot points. There we go. All right, so we are gapped up slightly in the overnight hours. We're looking for a red to green play here. This is a very, very cheap company, so we're not talking about, big moves in a market like this. Percentages are key. MT was another one. Red day yesterday. It is gapped up this morning in the pre-market. We want to see this open at yesterday's open or better. That will put us very close to the breakout pivot. This thing is up 2.37% this morning, right? So it's already up 2.3. It's got an ADR of 2.4. I'm not sure if it's got a market maker move going on at the moment. Yeah, it's got a market maker move of 1.2. So you can add that to the ADR. That would give us a 3 point, we'll call it 3.6. Well, if it's only moved 2.4, it's still got another 1.2 hiding inside of it, right? So it's got a little bit left. MRX or not. Move on to the silver. Red to green. Notice the structure here. Really struggling to get through that level. We are up in the pre-market more than 0.75%. It's got an average daily range of 1.5. It even has a market maker move right now of another 0.5%. Now, again, it's a cheaper company, but that's or an ETF, but that's not necessarily a bad thing, right? It means you can um, add stock into your options trade. Why would you want to do something like that? Just for a visual reference, kind of give you an idea of how adding stock can really change the shape of the trade that you're in. So suppose, just for an example, that we had ourselves in an iron condor and say it's not really working out, right? Wow, that's hard to see. That's better. So, we've got ourselves an iron condor. Things aren't really working out. And we're thinking, man, I got to adjust this iron condor because I don't want to really close it as a loser, but I don't want to make big adjustments and then end up screwing it up in some way that then I have to go and adjust it again. What if I bought just one share of this company, ETF, whatever we happen to be trading? Notice how it's slightly slanted now. And that was just one share. As I add more shares, it continues to increase in its slant. Now, I wouldn't go out and sell shares to get this thing to slant in the other direction, right? I wouldn't short this thing to turn the tilt in the other direction. But if you're being overrun to the upside and you want to decrease this loss end here, just adding shares is a really good way to go. Just saying, right? So a cheaper company or a cheaper ETF in this point, not necessarily a bad thing. Either way, we're at this structure. We're looking for a red to green today, a breakout on a red to green. My go-to is 4%, so you can go 4% out of the money buying calls on a play like this. And Tyson, which I put it on there, and we've seen We've seen some crazy moves in things lately where we're just looking at it thinking, what the heck are you doing running? And it doesn't even, now it doesn't look like a red to green. When I was on TrendSpider this morning, flipping through there, it sure did look like a red to green. Um, Not sure what was wrong with TrendSpider, but that's not a red candle yesterday, so it's not a red to green. Maybe we'll let that one slide. Take that one off. So, it's a good starting point. As usual, when I'm looking at red to greens, I'm also trying to attach that to something else. Inside day, bear flag, pennant failure, trend line breakover, basing pattern, something, right? Not just, oh, I had a red day yesterday. Gotta have something better than that. All right, the airlines are on the move this morning still, but everything is just really muted, right? We've got all these green sectors, and yet they're not very green. Jets are looking good. Tesla made it a pretty amazing move this morning, and it's still holding momentarily. Nice bounce off those lows. The trend is intact though, and this is just a nice pullback. So I'm not necessarily looking for a recovery rally in this thing. It's been persistent and consistent to the downside. A very nice, clean trend. No reason to buck the system. So a couple of good names that are up, at least 1%, but it's not looking that hot out there at the moment. Just, on a day like this, guys, we're really not going to want to use the sectors. We're going to want to be stock pickers and actually use our own scanners and watch lists. For me, that just means using weekly options, and then I'll visually go in and see what's on the chart that I may want to trade. So what I got for you guys, be careful, be safe. I will be streaming in the large caps this morning. I'll see you all around 9:15.